If you want to learn how to day trade profitably, watch this A to Z guide from an elite day trading firm and our team of traders. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from the team at our prop firm so you can grow your trading account. Does anyone really make consistent money day trading? Can you make money day trading? How hard is it? What does it really take? And how does it all work in the real world? These are questions most beginners have. And these are the questions that will be answered in this video, plus much more. So if you've heard about day trading, but don't know where to begin, or if you've dabbled with day trading, didn't do as well as you hoped, and just don't know the right way to give yourself the best chance to make consistent profits, or if you've lost a bunch of money trading on a longer time frame, are curious about day trading but skeptical about the world of day trading, this video was created for you. I've day traded for over 25 years and have run a proprietary trading firm since 2005, and we do a ton of day trading. We've done so much day trading, we don't even call it day trading, but rather active discretionary trading. We've built our firm teaching beginners how to actively trade. And we're proud to have built numerous 7-figure-a-year traders, with the best making 8 figures a year. This makes us one of the longest lasting and most successful proprietary trading firms out there. And in short, yes, you can really make consistent money day trading. And there are many more benefits to day trading than just the ability to consistently bank profits. For those of you who don't know day trading, or active trading as we say, it's a historically profitable trading strategy that today can be deployed by just about anyone. Advances in technology, namely the internet and online trading platforms, have revolutionized the game of trading, so now you can day trade from your home. Let me share a little known fact about day trading. This trading strategy used to be available only to the elite trading houses like Goldman Sachs and JP Morgan and other large trading institutions with direct access to the exchanges. And they banked consistent and huge profits every month, every day, every hour using this trading strategy that was solely available to them. But now anyone with an internet connection, laptop, and a trading account can use this time-tested strategy. Done well, it is extremely profitable. As the co-founder of SMB Capital, a New York City-based proprietary trading firm, and actually now we have offices in Miami as well, that executes day trading techniques, and the author of 2 trading books on the subject, One Good Trade and The Playbook, I'll share in this video the only guide you'll ever need on day trading. With mostly these day trading techniques, we've developed traders who have achieved the ultimate success as a trader and surpassed their wildest financial expectations. In this video, we're gonna cover for you the incredible benefits of day trading, the drawbacks of day trading. What is day trading for the complete beginners? The fundamentals of candlestick charts, day trading basics, what you need to be a successful day trader, the essential ingredients of profitable day trading strategy, day trading strategies, risk management, stock selection. What are the best stocks to day trade? The attributes of a successful day trader tools and resources, how to level up your day trading with our proprietary trading firm, SMB Capital. Okay, let's start with the incredible benefits of day trading. Okay, you may be wondering, what can day trading offer for me? Great question. Let me try and help you with this answer, leaning on my experience in this discipline. From my seat, the top 6 benefits of day trading are, number 1, day trading offers the potential for quick profits. Number 2, day trading offers the potential for huge profits without requiring substantial capital. Number 3, day trading is accessible for many. The rise of online trading platforms have made it easy for anyone with an internet connection and computer to trade. You can literally day trade from your home profitably. 4, day trading is exciting. Every day is new, and you're navigating the top news events of the day. One day you might be trading Tesla with Elon Musk in the news. The next day you might be buying the drug stocks because of a global pandemic like COVID. The next day you might be trading SPY because trade tensions between China and the US are rising. 5, flexibility. Day trading can be done from anywhere with a computer and an internet connection. No commute, no boss. 6, self-discovery. You will learn more about yourself day trading for a year than anything else you have ever done. Okay, let's tackle the drawbacks of day trading. So some of you probably are used to seeing videos of lavish trader lifestyles, trading gurus, trading off a laptop for an hour a day, heck, maybe even 15 minutes a day, and then relaxing on some secluded beach for the rest of the day. These trading gurus sell the models and bottles, stacks of cash and Lambo dreams lifestyle. They sell it well. Is this the reality of a day trader? Well, all I can tell you is that our day traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills, because at our firm, that's what we found it really takes to make it in this game. And day trading does have some other drawbacks as well. From my seat, the top 5 drawbacks to day trading are: number 1, high risk. Day trading can bring significant losses to those who are not properly trained. Number 2, emotional stress. The fast-paced nature of day trading can be emotionally taxing, as traders constantly deal with the pressure of making quick decisions and managing losses. Number 3, time commitment. Successful day trading, elite day trading, which we do at SMB, often requires focusing for extended periods of time and processing large amounts of fast-moving data to spot excellent risk-reward trades. Number 4, financial costs. Day trading can involve high commission fees, taxes, and other transaction costs that can erode profits, especially for smaller traders not trading at a proprietary professional firm. I should add, this is not true for traders at our prop firm, but almost always is for independent traders. Number 5, a steep learning curve. It takes time to become consistently profitable. Day trading can be difficult, requiring a thorough understanding of news catalysts, order flow, technical analysis catalysts, trading strategies with edge, trading psychology, and risk management. If someone tells you that you can become profitable watching a video, run. Trading is not easy. So given all of these drawbacks, is day trading really worth it? Okay, let's see. On the benefit side, we have no boss, unlimited upside, no commute, excitement, self-discovery, in exchange for some hard work, patience, commitment, and discipline. But let me ask, don't you need hard work, patience, commitment, and discipline to be good at anything? Why would anyone expect day trading to be any different? But to me, day trading, active trading, has been the best job in the world. And I'm grateful to have found such a rewarding career. And we have a firm full of consistently profitable day traders at SMB who would say the same. Okay, let's tackle what is day trading for the complete beginners. Okay, so what is this whole day trading thing about? What exactly is day trading? Let me help you with this. Day trading is when someone buys and sells financial instruments like stocks within the same day. We say intraday. In fact, you might hold a trade for only minutes or hours as a day trader. The idea here is to make a profit, a quick profit from short-term price fluctuations, and then wrap everything up before the market closes. Let me offer an example. Let's say you're a day trader and you've been watching a particular tech stock, let's call it XYZ. One morning, you notice that XYZ stock price has dropped rapidly, but you're confident for various reasons it's trading way too low, and it'll bounce back and trade higher during the day. You decide to buy 100 shares at $50 each, spending $5,000 in total. Just like you predicted, the stock climbs up to 52 by the afternoon, and you sell all of your shares, making a cool $200 profit, before any fees and taxes, of course. That's a simple example of a day trade. And now you know what a day trade is. Day trading is just doing more of that every day, all day long, while the market's open. Okay, so now you know what a day trade is, but you're not sure how to make one and navigate the world of day trading. So let's get into the first thing you'll need to know to be able to day trade: how to analyze candlestick price charts. And to do this, we have a special treat for you from our prop desk. Let's bring in an experienced trader and fantastic mentor at S&B, Garrett Drinan.
Since most technical analysis is centered around price charts, let's examine how to read a candlestick chart, the most common chart style used by traders. So, what is a candlestick chart? The candlestick chart is a highly visual tool that is part of almost every trader's arsenal. Simply put, a candlestick chart is a type of price chart. It differs from a traditional line chart in that it offers much more information about price movement. So here's an intraday chart of SPY. In this example, each candle represents 5 minutes. The chart starts at 9:30 and ends at 4 p.m. So for every candlestick chart, each candle represents a specific time interval, call it the time frame, and illustrates 4 significant price points within its respective time frame: the open, the high, the low, and the close. So now that we understand how each candle is constructed, let's bring them to life and examine some of the ways we can use candlestick charts to read price action. We'll examine the range of the candle along with the length of the body and the wicks, and then take a look at what it means to use different time frames. The range of the candle can tell us something about the volatility of the market. The length of the body and the wicks can tell us even more information about the price action within each candle. A candle with a long body signifies a strong directional price move within its time interval. A series of consecutive large directional up or down candles can represent range expansion and a strong trend. A candle with a narrow range signifies minimal price movement within its time interval. A series of consecutive narrow range candles at similar prices or within the range of the previous candle can represent volatility contraction and price consolidation. A short body with long wicks on both ends signifies minimal net change between the open and the close within a large range. These candles often represent indecision by market participants. A very long upper wick and a close near the low of the candle tells us the price attempted to rally and was rejected, all within the time interval of the candle. A series of long upper wicks or one very aggressive upper wick at a key price level can represent rejection at potential resistance. Conversely, a very long bottom wick and a close near the high of the candle tells us that price attempted to drop and was bought, all within the interval of the candle. A series of long bottom wicks or one very aggressive bottom wick at a key price level can represent absorption at potential support. The elements of each candle are building blocks that tell us a story as they print on the chart. The entire story told through the cumulative effect of the candles on a chart is much more important than any one candle in isolation. We can use different time frames to zoom in and out in order to see the entire picture. So as you now know, each candle represents a time interval referred to as the time frame. On a 1 minute time frame, each candle represents 1 minute of price action. On a 30-minute time frame, each candle represents 30 minutes of price action. And on a daily time frame, each candle represents 1 day of price action from the 9:30 a.m. open to the 4 p.m. close, and so on. So a higher time frame refers to longer time intervals, such as a daily or weekly chart, and provides a more zoomed out perspective. And a lower time frame refers to shorter time intervals, such as a 5 or 1 minute chart. So as we just kind of laid out, my lower time frames tend to be 2-minute bars, 5-minute bars, and my higher time frames tend to be daily charts, weekly charts. When you start to use candlestick charts, play around with the time frames to visualize which time frames represent your trading style and the way you wish to look at the market. It's a best practice to utilize multiple time frames to get a multi-dimensional view of the market. Now that you understand all the basics of candlesticks and general price action, you'll be much more equipped to understand the exciting trading strategies we'll cover later in this video.
All right, awesome. Thank you, Garrett. If you want to dive deeper into technical indicators, Garrett teaches a class for SMB Inside Access doing just this that you can join. The overwhelming response from our trading community is that Garrett is an awesome person who adds tremendous value to their trading. Okay, now let's go over day trading basics. Trading can feel like learning a foreign language. Help me. Perhaps you started to learn about day trading, but just didn't understand the terminology. People were using terms and words and phrases that were like a foreign language to you. How can you day trade if you don't understand what in the world people are talking about? Now, admittedly, day trading has its own language and terminology that can have some new traders confused and intimidated. It can be frustrating not being able to understand what in the world people are talking about. So let's define some of these terms for you so you can follow the lingo and understand day trading better. It won't be hard after learning some key terms. In fact, let's define the top 10 most important terms you should know as a day trader. Number 1, bid. The bid is an offer to buy a stock at a certain price. When you place a bid, you're essentially telling the market that you're willing to pay a certain amount for a particular stock. So how does this work in practice? Let's say you're interested in buying shares of XYZ company. You might place a bid of $50 per share, indicating that you're willing to pay up to $50 for each share of the company's stock. If another trader is looking to sell shares of XYZ company at that price or lower, your bid will be matched and the trade will be executed. All right, number 2, ask. At its core, an ask is an offer to sell a security at a certain price. When you place an ask, you're essentially telling the market that you're willing to sell a particular stock or other financial instrument for a specific amount of money. So how does this work in practice? Let's say you own shares of XYZ company and you're looking to sell them. You might place an ask of $55 per share, indicating that you're willing to sell your shares for up to $55 each. If another trader is looking to buy shares of XYZ company at that price or higher, your ask will be matched and the trade will be executed. Number 3, margin. Margin is the amount of money you need to put up in order to open a position. It's essentially a loan from your broker that allows you to trade with more money than you actually have in your account. Number 4, spread. The spread is the difference between the highest bid and the lowest ask for a particular security. In other words, it's the difference between the highest price someone's willing to pay for a stock, the bid, and the lowest price someone is willing to sell it, the ask. So how does this work in practice? Let's say you're interested in buying shares of XYZ company. You might see a bid of $50 per share and an ask of $51 per share. The spread in this case is $1, the difference between the highest bid and the lowest ask. Number 5, stop loss. A stop loss is an order you can place to automatically sell a security if it drops below a certain price. This risk management technique can help you limit your losses if a trade doesn't go as planned. Number 6, volatility. Volatility refers to the degree of variation of a stock's price over time. High volatility means that a stock's price can fluctuate rapidly and dramatically, while low volatility means that it tends to be more stable. It doesn't move as much. Number 7, candlestick chart. A candlestick chart is a type of chart used to represent the price movements of a security over time. Each candlestick represents a specific period of time, such as a day or an hour, and shows the opening and closing prices as well as the high and low prices during that period. Number 8, technical analysis. Technical analysis is a method of analyzing financial markets by studying historical price and volume data. Traders use technical analysis to identify patterns and trends that can help them predict future price movements. Number 9, fundamental analysis. Fundamental analysis is a method of analyzing financial markets by examining the underlying economic and financial factors that influence a security's price. Traders use fundamental analysis to evaluate the financial health of a company and determine whether it's a good investment. Number 10, liquidity. Liquidity refers to the ease with which a security can be bought or sold without significantly affecting its price. Highly liquid securities are easy to buy and sell, while illiquid securities may be harder to trade and can be more volatile. I hope that helped you. By understanding these key terms, you'll be better equipped to navigate the world of day trading. Okay, let's tackle our next topic. Keep more of your hard-earned money, different order types, and how to place them. Okay, so now you have a better understanding of the key terms used in day trading and can better speak the language. But you still are confused about the different ways you can enter actual orders to buy and sell a stock. And maybe you feel this has cost you real money in the past, lacking this knowledge. Totally makes sense. Well, let's bring in another experienced trader and mentor at SMB Capital, Justin Spiro, to help you with this. Now, some of you may recognize Justin as he's produced many invaluable videos on our YouTube channel to help traders enter and exit better with his bar by bar videos.
Simply, if you knew how to enter your orders better, you can make more money. You could have bought a stock at a better price and sold it at a better price instead of giving this money away to someone else who understands the market execution better than you. Let's help you keep more of your money with a quick tutorial. In this section, we'll explore the most common order types and how to place them. Market orders. A market order is an order to buy or sell a security at the current market price. When you place a market order, your broker will execute the trade as quickly as possible at the best available price. Market orders are generally the fastest way to enter or exit a trade. To place a market order, simply select the security you want to trade, choose the market order option, and enter the number of shares you want to buy or sell. Here's an example to help you understand how a market order works. Let's say you're interested in buying shares of XYZ stock, which is currently trading at $50 per share. You decide to place a market order to buy 100 shares of XYZ. You log into your trading platform, select the XYZ stock, and choose the market order option. You enter the quantity as 100 shares and confirm the order. Once you hit the submit button, your market order is sent to the exchange and will be executed as soon as possible at the best available price in the market. In this case, since you placed a market order to buy, you'll get the shares at the current market price. It's important to note that the market order provides a high level of certainty of execution since they prioritize speed over price. However, the actual execution price of a market order may vary slightly due to market fluctuations and liquidity. Market orders are commonly used when you want to enter or exit a trade quickly and don't want to wait for a specific price. It can be particularly useful for highly liquid stocks where the bid-ask spread is narrow, meaning the difference between the highest price buyers are willing to pay, bid, and the lowest price sellers are asking, ask, is small. However, it's worth mentioning that market orders may carry some risks, especially during periods of high volatility when trading less liquid securities. In such cases, the actual execution price of a market order can deviate significantly from the displayed price, resulting in what's known as slippage. That's why it's important to use market orders judiciously and consider the market conditions and the specific stock you're trading. Limit orders. A limit order is an order to buy or sell a security at a specific price. When you place a limit order, you're essentially setting a maximum price you're willing to pay, if you're buying, or a minimum price you're willing to accept if you're selling. Your broker will only execute the trade if the security's price reaches your specific limit. Let's say you're interested in buying shares of ABC stock, which is currently trading at $50 per share. However, you believe that the stock is overpriced and you're only willing to buy it if the price drops to $45 per share. You log into your trading platform, select the ABC stock, and choose the limit order option. You enter the quantity as 100 shares and set the limit price at $45. You confirm the order and submit it. Now, your limit order is in the system, waiting for the stock's price to reach $45 per share. Once the stock price drops to your specified limit, your order will be triggered, and the trade will be executed at or better than your limit price. It's important to note that when using limit orders, there is a possibility that your order may not be executed if the stock price fails to reach your specific limit. However, it provides you with more control over the price at which you enter or exit a trade. To place a limit order, select the security you want to trade, choose the limit order option, and enter the price you're willing to pay if you're buying, or the price you're willing to accept if you're selling. Stop orders. A stop order is an order to buy or sell a security once it reaches a certain price. Stop orders can be used to protect your profits or limit your losses. For example, if you own a stock and you want to protect your gains, you can place a stop order to sell the stock if the price drops below a certain level. Here's an example to illustrate how a stop order works. Let's say you decide to buy shares of XYZ stock, which is currently trading at $50 per share. However, you want to ensure that you minimize your potential losses in case the stock drops. So you place a stop order. You log into your trading platform, select XYZ stock, and choose the stop order option. You enter the quantity as 100 shares and set your stop price at $47. By doing so, you're stating that if the stock price falls to or below $47 per share, you want to automatically trigger a sell order to limit your potential losses. Once you confirm the order, your stop order is in place. Now, if the stock price drops to $47 or below, your stop order will be triggered and a sell order will be executed to exit your position. This helps you minimize your losses by preventing further decline in the stock's value. It's important to note that a stop order does not guarantee execution at the exact stop price. In fast-moving or volatile markets, the actual execution price may be different due to slippage. However, the purpose of a stop order is to provide a level of protection and prevent significant losses. To place a stop order, select the security you want to trade, choose the stop order option, and enter the stop price, the price at which you want the order to be executed. Stop limit orders. A stop limit order is a combination of a stop order and a limit order. With the stop limit order, you set a stop price and a limit price. If the security's price reaches your stop price, your broker will place a limit order to buy or sell the security at your specified limit price. Let's explore how it works with an example. Let's say you decide to buy shares of XYZ stock, which is currently trading at $50 per share. However, you're concerned about potential downside risk. So you want to set up a stop limit order to protect yourself. You log into your trading platform, select XYZ stock, and choose the stop limit order option. You enter the quantity as 100 shares, set your stop price at $47 and your limit price at $46. By setting a stop price at $47, you're stating that if the stock price falls to or below $47 per share, you want to trigger a sell order. However, you also want to set a limit price at $46, which means that if the stock drops and reaches your stop price, you want to execute a sell order at a limit price of $46 or better. Once you confirm the order, your stop limit order is in place. Now, if the stock price drops to $47 or below, your stop order is triggered. At that point, a limit order to sell is placed at $46 or better, allowing you to have more control over the execution price. Using a stop limit order helps you manage your risk by defining a specific exit point, stop price, and ensuring that you sell at or above a certain price, limit price. It offers an added layer of protection, allowing you to potentially secure a better selling price and avoid potential slippage. However, it's important to consider that using a stop limit order comes with its own set of risks. If the stock price drops quickly and bypasses your limit price without executing the trade, you might miss the opportunity to sell. This is known as the risk of non-execution. To place a stop limit order, select the security you want to trade, choose the stop limit order option, and enter both the stop price and the limit price. Understanding the different types of orders is essential to becoming a successful day trader. By knowing how to place market orders, limit orders, stop orders, and stop limit orders, you'll be able to enter and exit trades more effectively and manage your risk more efficiently. So the next time you're ready to take a trade, make sure you choose the right order type that's right for you and your trading strategy. It's your money. We want you to keep more of it. Okay, let's get back to Bella.
Thank you, Justin. All right, let's tackle our next section. I have some good news for you, the secret about market research and analysis. You may feel you're not sophisticated enough to be a trader. Perhaps you can't envision understanding all of the fundamentals of a company and think that's going to hurt you. You think there are experts on Wall Street who know more than you and you just can't compete against them. I have some good news for you. You don't have to be an expert in fundamentals. You are a trader. You're not an analyst. And just between us, being an analyst is nowhere near as fun as being a trader. That is not what a day trader does, nor has to do to consistently pull profits from the markets. What do you have to know? As a day trader, it's important to stay on top of market trends and news in order to make informed trading decisions. Certainly that's true. We do start each trading day going over the big picture of the market. What is the market most concerned about? What are the majority of market participants most concerned about for a select stock? We game plan for news to hit the market and our select stocks that will make the market or select stocks stronger or weaker. Presently, the market is most interested in inflation. When we get data that hits the market that shows inflation is improving, the market is most likely to trade higher. Recently, for select regional bank stocks, the market was most interested in the amount of their deposits. When data hit the market that deposits were increasing, the regional bank stocks usually traded higher. News can impact market prices, so we educate ourselves on what will move the markets and stocks. But these are things anyone can learn how to do. They're not overly time-consuming, nor does it require a master's degree in economics. Admittedly, at our trading firm, traders do receive research reports sent to them by top research firms on the street. For example, let's say that Apple has just reported earnings, and a trader wants to learn what the expert research analysts think about the earnings. Well, research from top institutional firms are sent to their email inbox for them to read. This way, they can make better trading decisions on Apple in the coming days and weeks. However, it's important for traders not to fall in love with their opinion or the opinion of some research analyst after doing research. Price action is king for day traders. And you don't need to do any research to follow the price action. If you think XYZ stock should trade higher and it doesn't, then a solid day trader cuts his position and then reevaluates. This is not value investing. We don't hold positions that are trading against us and wait and hope for the price to rebound. The market does not care about your opinion. You're one player in a game played by many who have varying objectives. We are day trading. Day traders respect price and exit. Price action is king. In fact, there are some traders at our firm who can trade profitably just by watching the price action in the stock. Additionally, if you ask them what the stock does, they may not even know the answer. Yet with strong trading skills and a respect for price action, they can profit consistently. We are traders. Okay, let's tackle what you need to be a successful day trader. We, SME Capital, would never allow anyone to start trading our firm's capital without comprehensive education and training. It's dangerous to start trading before you're properly trained. Do you want to know the thing that bothers me the most doing what I do and having the position that I have in the trading community? It's the emails I've gotten over the years from new traders who lost let's say 50,000 plus, and now are reaching out to me for guidance. Getting these emails really bothers me. Perhaps more than anything, I can imagine how much pain this has caused the new trader. In their emails, they often share their regret for not finding SME training, our education arm, sooner to help prevent their excessive and unnecessary losses. Let's try and end all of that right here together. I do not want to see one more email like this. You don't want to be that person writing one of those emails to me or somebody like me. Let's ensure you know you must have the proper day trader education before you risk your hard-earned money in the markets. Okay, so we're on the same page that you must have a solid trader education to begin day trading. So the next logical question is, well, what do you need to learn? And there are all these videos on YouTube. There are all these tweets on Twitter with trading lessons. People are posting charts with lines all over them, and they make no sense to you. You think, how can anyone make sense of all those lines? And there are all those trader education books. Sorry, I did write 2 of them. And the courses, there are courses for everything. Let us help you here with what you need to learn at a minimum to start day trading. Stock selection. As I wrote in One Good Trade, you're only as good as the stocks you trade. You can be the best trader in the world, but if you're trading the wrong stocks, you will not make money. Conversely, you can be a new trader trading the best stocks and profit. New traders must learn how to spot and trade the best trading stocks for each trading session. For example, with our training, new traders are prepared for their trading session with an AM meeting where we highlight the best stocks and best levels for them to trade. You also need to learn tape reading. Tape reading is the study of order flow of a stock. When traders learn tape reading, they can examine the buying and selling being done in a stock and find areas where the stock's more likely to go up or down. This is a skill they learn, like a basketball player learns ball handling. Can you be a solid point guard in basketball without learning how to dribble? With this essential skill for day trading, traders can position themselves to find excellent risk-reward trades at prices to help grow their trading account. All right, you also need to learn technical analysis. Technical analysis is like studying the heartbeat of the market. It involves examining historical price and volume data to identify patterns, trends, and support and resistance levels. By using indicators and chart patterns, traders can make more informed decisions and gain insights into potential price movements. And this helps them navigate the exciting world of day trading. At our firm, we make trades only after considering the longer term and intraday charts based on our technical analysis skills. Our best trades tend to occur when these timelines align. Okay, you also need to learn trading setups with real edge in the real world by real traders. Unfortunately, too many traders start to trade deploying strategies that just don't work. Perhaps they've learned strategies from a trading educator that used to work in the past, but have stopped working. We teach our new traders 20 strategies used daily by profitable traders on our prop desk. We teach them strategies that have real edge in the real world by real traders. They experiment with each of these trades, find the ones best for them, and then build a playbook around their best trades. Okay, so you also need to learn how to playbook, how to build a business for your trading, how to build a trading business. Trading is a business. And every trader needs a business plan to run their trading business. That business plan is your playbook. Each trader should build their playbook, a detailed compilation of their favorite setups in a comprehensive template that I created in my second book, The Playbook. The playbook becomes your trading business. Setups for you to take with edge, which is your job to execute. Okay, you also need to learn trader psychology. Trader psychology plays a pivotal role in the success of traders. This is why we've worked with the best trading psychologist in the country, hands down, Dr. Brett Steenbarger, to help our traders. It's not just about analyzing charts and executing trades. It's about understanding and managing our own emotions, our own biases, our own mindset. The optimal mindset for a trader is focused, open-minded, self-aware, calm, and excited for the trading opportunity. You need to learn peak trader performance. We teach our traders to come to the market in their peak performance states. They study what leads to them trading at their best, as well as the setups they trade best. They're taught best practices that will help them be at their best during market hours. Traders can improve their performance by measuring and improving their sleep, daily mindfulness practice, exercise, healthy eating, recharging, and constructing a rewarding life outside of trading. Traders need to learn risk management. You must determine your risk for each trade before you enter the stock. We'll talk more about risk management a little later in this video. Traders need to learn how to review their trade reviews. Our firm and traders have succeeded because of our culture to improve daily. Traders are taught daily review best practices to get the most out of each trading session. They're taught techniques like the daily report card, trading journal, playbook, book of charts, monthly review, video replay, easy money trade reviews, and learning from other traders. You also need to learn technology. After you find your favorite trades and build a playbook, traders should use technology to find more of these trades. Trade them more often and trade them with more size. Traders can build alerts, scripts, and automated models to do just this. Traders also need to learn from senior traders who can teach. Trading's not easy. Lean on those who have succeeded as traders and teach traders to become profitable. Senior traders have gained the experience to help guide you on the trades worth taking and mastering. I'll just share based on my experience. Too often elite traders are not very good teachers. You're not going to learn from a successful trader who can't teach. Learning from senior traders who also teach well will give you a better chance to succeed and accelerate your learning curve. All right, now this is the minimum you need to learn before trading live. From here, there certainly are more advanced topics you're going to learn as you progress as a trader, but you will have time to learn them after you develop consistency as a trader. Okay, let's tackle the essential ingredients of a profitable day trading strategy. I'm often asked, what's the most important factor to trade successfully? Having run a trading firm for almost 20 years, the answer couldn't be any clearer to me. Develop a trading strategy or strategies with edge. You have to be making trades that actually work. You have to be taking trades that actually have edge, trades that have real edge in the real world of trading, being made by real traders who are making real money. Period. Full stop. And then when you've developed day trading strategies that have an edge, you have to be taking only them. You must be patient and wait for these trades to visit the market. You can't mix your trading results with other trades that don't really have an edge. You must have the discipline to be able to wait for these trades when you have an edge and not take others. Think of it this way. You decide to open up a pizza parlor. You've saved your whole life and developed an amazing recipe. Your pizza is delicious. You open up and people love it. There are lines out the door. And then someone walks in and asks for, wait for it, sushi. What would you do? I would hope that you would politely respond by apologizing that you don't make sushi. What you don't do is try and make something that you don't make. Unless, of course, you're in the business of being one of those diners that has those menus that are like 100 pages. Yet unprofitable traders do this all the time. They don't stick with just their best trades and rather try too many other trades for which they have no edge. And this is often the reason they consistently lose money. Here's how we teach traders on our desk to develop day trading strategies for themselves. First, we teach them the basics of trading. We help them build a strong foundation. They learn everything they need to learn about trading. We teach them stock selection, risk management, tape reading, the principles of one good trade, how to build a playbook, trade review, the easiest setups with Edge to start trading, trading psychology, technology, technical analysis, trader peak performance. They build a solid trading foundation. We expose them to numerous trades that have real-world edge that are made by real traders who make real money. Trades that our professional traders are using daily and in the present market conditions to consistently make money. We ask new traders to experiment with each of these trades on a trading simulator. We ask them to pay attention to the trades that make the most sense to them, the trades that are coming easiest to them. The numerous trades that we expose them to are very different. Some are very fast-moving trades. Some require more analysis. Some are held for longer time periods, some very short. We ask the traders to determine the types of trades that are best for their unique talents and personality. We're all different. We'll have different strengths and weaknesses. We want our traders to build from their unique strengths. This is known in economics as match quality, the degree of alignment between the traits of an activity and the traits of a person. So if some traders are very fast thinking, we encourage them to do more scalping, a strategy for that type of thinking. For example, one of our top traders is so fast that a top market making firm shut off his access to their routes because they couldn't keep up with him. They literally refused to do business with him because he was too good. He was too fast. If traders are more analytical, then we encourage them to find trades that accentuate these talents. One of our 7-figure-a-year traders was notorious for doing hundreds of hours of research on M&A trades, which were his strongest trades. In short, after being exposed to these different trades with Edge, our traders determine their niche. Then they build a playbook based on this niche and start trading with capital. They start trading with a small amount of capital. After a trader determines their niche and trades live with their playbook, they work to improve it. They measure their trading stats on all their trades to ensure they have an edge. They build playbook trades of the best trades in their niche. They study the heck out of these best trades. They watch video replay of these trades by recording their trading screens. Yes, they record their trading and watch it back. They parse out the key variables of these trades and then backtest them. They see what the historical edge is for these trades. They learn what variables are indeed most important about trades and adjust their trading based on these results. They use technology to help them improve their results. They build alerts that alert them in real time if their best trades are present. These alerts are signaling that their favorite trades are available to them in the market. They seek out senior traders for their mentoring on how to improve their trading. They communicate with senior traders in real time about trades to make the best trade decisions. This is how you build a trading edge, a trade that pulls profits consistently from the market. Okay, let's tackle day trading strategies. Now look, there are many different day trading strategies that consistently profitable day traders use. Let's give you a taste of the more frequently used day trading strategies so you're familiar with many of the basic winning strategies. Let's ask Jeff Holden, head of trader development at SMB Capital, to help us here. Now, every day at 11 a.m. Eastern Time, Jeff teaches a class, we call it Trader Development. He reviews the best trading opportunities from the open. Some of the trades that he reviews comes from the basic winning strategies that we're going to outline.
Scalping's a day trading strategy that involves making multiple trades throughout the day with the goal of profiting from relatively small price movements. So the idea is to buy a stock at a low price and sell it at a slightly higher price, capturing a small profit. So these trades last minutes, sometimes even hours. They're pretty much always held with a very short period of time. With a small amount of capital, you can actually make significant profits using this strategy if you use it wisely. So let's share an example of a scalp for you using the chart below. A stock trades strongly with a push higher and then pulls back slightly and then starts to go back up. We enter, you can see that green arrow, and then we sell half at its prior high, and then we sell the remainder with a break of the trend line. So momentum trading entails recognizing the direction a stock may move and then joining in that direction. So if you see a stock trending up for a period of time, then you join the movement by buying the stock. When the stock stops going up, then you just sell it. So you're joining the momentum and exiting the trade when the momentum to the upside subsides. You don't care where the stock goes after you sell it, as your job is just to follow the momentum of the move and then exit. Let's share an example of a momentum trade using the chart below. So Netflix gets above an important level and you buy, expecting the stock to trade higher. Others are likely to buy because the stock has traded above a very important level. So other traders are likely to jump into this stock and they're going to join the momentum of the stock to the upside. So we buy above, but as close to that $350 price breakout as we can. We sell when the upward momentum dissipates. In this case, the stock cannot hold above an area it had previously. We conclude the momentum to the upside has slowed for the time interval we're looking at, and we sell. We don't care where the stock trades after that, as we made a successful momentum trade, which was really our goal. All right, range trading, it's a different type of trading, but it's a day trading strategy that involves buying and selling stocks within a very specific price range. So the idea is to identify stocks that are trading within a defined range with the expectation that the prices will continue to move within that range in the near future. Let's share an example of a range trade with our chart. So we find a stock that's not trading above the top of the range at that 336.90 area. We find a stock that's not trading below the bottom of the range near that 336.11 area. With a range trade, we buy at the bottom of the range and then sell at the top of the range. This is an example of a simple yet very effective range trade. With breakout trading, you're waiting for a stock to trade above a certain price and waiting, and then it finally clears a price that it could not trade above. When it does, you buy the stock and make what's called a breakout trade. This trade kind of works because many are watching for the stock to trade above a certain price before they are buying. Trading above this price is a signal for many in the markets that the stock will trade even higher, so they're going to buy. Two variables other than price we use to make the best breakout trades are volume and RVOL, relative volume. We want to see the stock doing unusual volume before the breakout, which we measure with relative volume or RVOL. And then we want to see even more elevated volume when the stock breaks above this important price, confirming the breakout will continue. Let's share an example of a breakout trade using our charts. So the stock finally breaks above that level it could not, indicated by that white line. When the stock clears this area, we buy. Also, notice the volume increasing, indicated at the bottom of the chart. When the stock is unable to hold a prior level, we sell. This is an example of a solid breakout trade. You're sitting in your trading seat and you see a stock drop precipitously, and you quickly conclude that the stock is oversold. Fade trading is just a strategy where you would buy, looking for the stock to quickly trade higher as it's sold off too much too quickly. It's a short-term price inefficiency. The price is not sustainable at this level because of price and time. During the trading day, stocks get oversold and overbought, and you can deploy a trading strategy for it to quickly revert back to a more appropriate price. So this is a very profitable and common core strategy for day traders to use. Let's share an example of a fade trade using the chart below. This stock is down 26% in 4 days and have just sold off way too much in our judgment. When the stock stops going down and starts to trade higher, we buy with the stop against the prior low. In this case, we see the stock trading above an area that it could not prior. We sell when the stock trades near our target, which in this case is close to where the stock opened the trading. This is an example of a fade trade. News quickly hits the markets that's unusually positive and unexpected. This is unplanned breaking news. This is breaking news. When this happens, day traders have a trading decision whether to buy the stock quickly and then sell the stock when it stops trading higher. Quickly deciphering the breaking news and piecing together what's most likely to happen to the affected stock, the sector, or the market can lead to very profitable trades. In the prop trading space, this is a strategy that can be used by traders to bank 8 figures a year in profits, while also being very consistent with their returns. So let's offer an example of a breaking news trade using our charts. News hits the wire that Microsoft is going to help a company with a key new initiative. We quickly conclude that this is a major positive for the stock if true. We immediately buy. We sell when the stock can't hold above an area that it could prior. So this is an example of a breaking news trade made by day traders. News Catalyst trade is a news catalyst trade available when a stock has an unusually good or bad news that was unexpected by the market. An example of this would be a stock that has recently released earnings. Let's say stock XYZ released earnings that they had a beat of expectations on the quarter and are raising their guidance for the entire year. And let's assume that the market was not expecting such a positive report. As a day trader, we might enter the next trading session looking for ways to buy the stock and ride it higher because of this positive news catalyst. It may take the biggest traders in the market days or weeks to accumulate the amount of shares they wish after this positive news catalyst. So as day traders, we can join the buying and ride it higher. Let's share an example of a news catalyst trade using the chart. So this stock reported an amazing earnings report. They beat on future guidance, revenue, and earnings per share, EPS. We conclude big money traders will want to own this name and it'll take them potentially days to accumulate a position. So we buy. We buy when the stock shows intraday strength and trades above the 52-week high. This is a buy signal for us. We sell into the close as our trend line was never broken. There was never a reason to sell the stock. We close our position at the end of the day as day traders rarely take overnight positions. This is an example of a solid news catalyst trade. Technical analysis trading. Price and volume create trading patterns that often repeat in the market. Students can study the best trading patterns that repeat to develop trades based solely on these technical patterns. We call these technical analysis trades. These are some of the favorite trades for retail traders. Let's share an example of a technical analysis trade with the chart below. In this trade, we use the technical analysis indicator 2-day VWAP. See the 2-day VWAP. This is a powerful indicator, particularly for day traders. When our stock trades near the 2-day VWAP, we buy, and then we sell when the stock shows weakness. In this case, it fails to hold above an area that it had shortly prior, so we exit as a day trader. This is a straightforward example of a technical analysis trade made by a day trader. After learning these trades and more, you'll want to follow these steps. First, experiment with these trades on a simulator. Second, determine the trades that are best for you and your trading career. Third, build your playbook with these trades. Fourth, start trading them live with very little capital. Fifth, measure these trades by keeping excellent trading stats. Tag and then measure all of your trading strategies. Sixth, increase your size and risk and frequency in the trades that have the most success for you. 7, eliminate your worst trades. 8, expand your playbook by studying new trades and adopting them into your business. Remember, trading is a business. Treat it that way. Put a professional system in place to build your business responsibly and effectively.
Okay, let's tackle the next section, risk management. You're going to be wrong. Let's ask Carlton Bryant, risk manager at S&B Capital, to share some essential thoughts on risk management.
You can learn and train and then build a playbook of effective day trading strategies, but without proper risk management, you cannot succeed. You cannot succeed as a trader without solid risk management. You're going to be wrong on trades. You're going to be wrong on many trades. This is the life of a day trader. You must learn to cut your losses quickly and keep your losses in check at all times. Risk management is essential on every single trade if you wish to become a consistently profitable day trader. Before each trade, a trader should determine their stop loss, where they are wrong on the trade, for each and every single trade. The trader should also determine how much they are willing to lose on each trade. We call this their max loss on a trade. This maximum loss should be a small percentage of your overall capital. For example, let's say you have a day trading account of $50,000. You should determine what percentage of this $50,000 you are willing to lose on a trade. A good rule of thumb when you begin as a trader is not to lose more than 2% on any one given trade. As you gain experience and you can increase your risk, perhaps risking up to 5% on a trade, depending on your playbook and your win rate on the setup. As traders, we live to play another day. We do not allow one trade to blow up our trading account. On our desk, traders set a maximum loss per day, per trade, per week, per month, per strategy. They work with the firm's risk manager, which is me, to set these limits. The trader and the risk manager agree to these limits and document this agreement in writing. Traders must stay within their risk limits. If they do not, then there are consequences. Their risk will be reduced by the firm or worse, until they can trade within their limits. In fact, not staying within your risk limits is a fireable offense on our desk. I share this to open your eyes to how serious risk management is for your trading and your career. The risk manager is there to help the trader during his or her worst moments. Keep the trader in the game. Stick to the limits he or she has agreed to, and to keep more of their profits. Bad trading, bad trades, losing trades, bad moments are bound to happen to everyone. But losing control of risk during these inevitable bad beats is not professional or acceptable. Sorry for the tough love here, but it needs to be said to everyone. Put simply, you cannot become a sustaining, successful day trader without solid risk management. I run a class each week with S&B Inside Access where we dive much deeper into risk management and review some of the best risk-reward trades of the week or easy money setups. I appreciate you spending some time with me to learn more about risk management, trade well, and always trade with stops and a plan.
Okay, let's tackle the next section, stock selection. What are the best stocks to trade as a day trader? And for this, let's ask Steve Spencer, co-founder of S&B Capital, for some help here.
You're only as good as the stocks you trade. Do you ever feel like you're trading the wrong stocks? And if you were in better stocks, you would do so much better? Well, you're right. You do need to be in the right stocks, and being in them makes all the difference. The best stocks to trade are what we call stocks in play. There's a lot to say here on stocks in play, but let me give you a primer. Stocks in play are stocks that have a catalyst, either a news catalyst or a technical catalyst. We stick to trading these stocks for the best ROI, return on investment, as a trader. Stocks in play offer us the most trading opportunities as day traders. Stocks in play offer us the best trading opportunities as day traders. You can find them every day in every kind of market, offering opportunities daily. A stock with a news catalyst can be a stock that has recently released earnings. It is best to find stocks that have unusually good or bad news that was unexpected by a majority of market participants. An example would be a biotech company, XYZ, just concluded a successful research trial with positive results with a drug covering a widespread disease. Big money traders will want to jump in and take a position with this positive news catalyst. We will want to trade the stock as a result along with them. Also, if a stock has a technical catalyst, this can be a great stock to trade. A technical catalyst is one where market participants are looking for a stock to clear a certain price and it hasn't for a significant period of time. And then the stock finally does. Market participants will want to buy this stock when it does. This can make for a significant technical catalyst to trade a stock. We confirm that a stock in play by looking at relative volume. R-Vol measures the increased volume that a stock is doing on a given day. We look for stocks that have an R-Vol greater than 3. This means that the stock is doing more than 3 times the average daily volume on this given day at the given time than the average day. Increased volume means a majority of market participants are more interested in this stock on this day. This allows stocks to move more during this trading session, which gives us more opportunities to profit and better risk reward on our trades if we know what we're doing. You can be the best trader in the world, but if you're in the wrong stocks, you will not make money. Conversely, if you're in the right stocks, you are much more likely to profit. I run an AM meeting daily with SMB Inside Access if you need more help finding the best stocks to trade.
Thanks, Steve. Let's discuss the attributes of a successful day trader. Many of you may be wondering whether you have what it takes to be a successful day trader. Will you be one of those traders who tries and fails? Will you be one of those traders who goes on to become a consistently profitable trader? I thought it might be useful to share the attributes that we search for at SMB Capital for when we're hiring traders at our firm. This may help you judge whether you have what it takes to become a consistently profitable day trader. Not judging, not suggesting this is the only answer, just sharing with you guys what we look for as a way to perhaps help. At our firm, SMB Capital, we hire new traders to trade firm capital. This is our business. This is what we've been in business for since 2005. We got to get this right. We got to hire the right people. What attributes do we search for? Number one, a growth mindset. The best traders seek to improve every day. Heck, every trade. Each trade is an opportunity to learn, no matter if you profit or lose money. The trade is giving you information for which you can improve. You paid for that information with your market tuition. Seize that knowledge. Number two, hunger to make money. I'll never forget reading the yearly review of one of our best traders after closing his first year of making over $1 million in trading profits. In his yearly review, this trader mapped out exactly what he needed to do to reach the next level in his trading. You might think, after making over $1 million in a trading year, that this trader would have been satisfied. He wasn't. He knew he could be even better. He was hungry to be even better. Fast forward a few years, he's gone on to become a multiple 8-figure a year trader. All right, 3, passion for trading. On some Saturdays, I come to the office to catch up on some work. Each weekend visit, our best new trader is here. He's reviewing the prior week of trading. He's doing the work when no one is around that makes him better. That is a passion for trading. Recently, I took 4 passionate traders to a Yankees game with my son. During the entire game, these traders talked and talked and talked about recent trades and trades on the horizon for the entire game. And they were all Yankees fans. That is a passion for trading. Number 4, controlled aggressiveness. There's a mural that we commissioned that hangs on the walls of SMB that encourages, if you see it, swing the bat hard. When you spot a trade that has asymmetrical risk reward, the best traders go for it. They make themselves uncomfortable with risk and push it. Number 5, ability to focus for extended periods of time. Day trading is a game of processing a lot of information quickly and waiting for moments when you have an edge. As we say, those trades just fall into your lap. They just hit you between the eyes if you're able to wait for these right moments. Focusing for long periods of time is necessary to spot these moments and then make easy money trades. Number 6, ability to process a lot of information quickly. There are many different ways to make money as a day trader, but whatever the strategy, the best day traders are able to process a lot of information quickly and more clearly than others. Basketball coaches look for players who are tall and long, as this gives players a very real edge. For day traders, thinking quickly and processing information quickly is a real advantage. Number 7, diligence. Here is a red flag that leaders at our firm notice. We're reviewing our recent trading. We ask a new trader what they traded. We ask a simple question, such as, what was the short interest in the stock? The new trader can't answer this question. That's not acceptable, and we all take notice. When you're trading a stock, there's certain information you need to know. If you don't take the time to learn this information, you're not going to trade as well. Being diligent is crucial. Number 8, work ethic. What does it mean to work hard as a day trader? To become a top day trader requires completing a daily routine each day of effective best practices that will drive your improvement. These improvements compound over time. Without the work ethic to finish this daily routine religiously, you'll never experience the power of compounding improvement. Sadly, you're never going to learn how good you can be as a trader. 9, equanimity. How do you respond after a trading loss? Do you get upset, cuss, blame others, and proclaim the market's rigged against you? Or do you calmly review each trade and try to learn and come back for the next trade as an improved trader? Each trade offers an opportunity for you to learn, but it's only the traders that can quiet their minds and pull the lessons out from each trade who can become their best trader. And finally, number 10, great teammate. We seek traders who will share, celebrate the successes of others, and make others at the firm better. This makes all of us better. When you're in an environment of sharing and growth, this makes you much better than you can be by yourself. Okay, let's discuss day trader tools and resources. You think you want to start day trading, but you're not sure what tools or resources you'll need to give yourself the best chance to succeed. You know intuitively that if you don't have these tools and resources, then your goal to become a profitable day trader will be thwarted. This is savvy thinking by you. Let's offer a primer for you so you have the tools and resources to give yourself the best chance to succeed. Here are the tools and resources you need as a day trader. Number 1, online broker. An online broker will help you set up a trading account and gain access to the markets. 6 examples of online brokers who cater to new day traders are Thinkorswim, TradeStation, Interactive Brokers, E-Trade, Fidelity, Robinhood. With an online broker, it's important to do your due diligence on trading fees. You'll need competitive trading fees on trade execution, short locates, margin interest, and other fees. Ask what all the fees are and how they compare to their competitors. Also ask how these fees will improve as you trade more. As you trade more, they should improve. As you gain experience, you may seek out brokers for high volume, active, advanced day traders, such as Lightspeed, Centerpoint Securities, Cobra Trading, Speed Trader, and Interactive Brokers. Online trading platform. Most online brokers will offer you a trading platform owned by their company. You may want to investigate others or may need a more advanced day trading platform after you gain experience. A reliable trading platform is necessary because during the most opportunistic trading opportunities, many trading platforms go down. And you will see traders on social media complain that their trading platform is down and they're unable to trade. This can be very costly if you can't exit and enter positions when you need to. Some advanced day trading platforms are Lightspeed, Dash Trader Pro, Tachyon, Sterling Trader Pro, Wolverine. Alerting solutions. What are trading alerts? A trading alert is as it sounds. It alerts you when a stock hits a certain price that you've set. You do need the functionality to set alerts on your trading platform as a day trader. Most online trading platforms will offer the ability for you to set alerts. For advanced day trading, you may want to set custom parameters for when you want to be alerted to a stock. For example, perhaps you want to see all stocks that hit an intraday high after 11 a.m. that also have an RVAL greater than 3. You can set alerts for this. Many trading platforms have this built into their platforms. However, some advanced day traders seek a more sophisticated alerting solution where custom filters can be built. Solutions for this may include Trade Ideas, TradeStation, and Bloomberg. Number 4, charting software. Many of the online trading platforms will offer a suitable charting platform for which to start day trading. For example, Thinkorswim has an excellent charting solution that many traders on our desk use to supplement their trading. Other charting solutions are TradingView, eSignal, TC2000, TradeStation, StockCharts.com. Number 5, news sources. You need to be connected to a reputable news source, a source where you can quickly look up if there's breaking news on the market or stock you are trading. Some popular news services are Trade the News, Bloomberg, CNBC, Benzinga, Briefing.com, MarketWatch, Reuters. Number 6, backtesting and automated trading tools. You should have a platform that allows you to backtest strategies. Perhaps you develop a trading thesis that you think could be profitable. Well, you want to test this theory by running a backtest on whether your thesis would be profitable based on historical data. It is optimal to have a solution, and we have this for our traders at our firm, where from your desktop, you can generate a thesis, backtest it, forward test the idea, and then run an automated strategy in the markets. Number 7, trading analysis tool. Our traders keep detailed trading statistics. They tag and then measure all the trades that they make. At the end of the day, week, month, they spit out reports on their trading stats to see where they are doing well and poorly. They make adjustments from here to boost their P&L. Trading statistics solutions include TraderView and Edgewonk. Number 8, comprehensive training. You need proper training before you start trading. Build a solid foundation with a solid trader education course. Experiment with different strategies that have edge used by real traders in the real world who make real money. Find your trading niche. Seek mentoring on this type of trading. Number 9, don't forget, you're going to need a powerful computer or laptop. Don't skimp on this, please, as when the market is most volatile, you don't want your computer to crash. A comfortable chair is essential for most day traders. A headset that connects to an audio chat is rampant on our trading desks. Okay, so those are the tools and resources you need to get started the right way as a day trader. Those are the minimum resources and tools that you need. Okay, let's tackle how to level up your day trading with SMB. Can you make money as a day trader? Is day trading something you could really succeed at? I do hope we've offered a valuable perspective on these important questions for you. I want to share a story from our trading desk in New York City that can make all of this even more real for you and give you even more insight on whether you can do this. This real story from our trading desk may have meaning for you as you decide whether to day trade. This is a real life story from our prop desk of 2 second-year traders from our firm who I recently had lunch with to celebrate a month where they each made over $150,000 in net trading profits. So we chose a pretty nice steakhouse near our Fifth Avenue office in New York City, as they deserved it. You know, I remember sneaking out to meet these 2 young men for breakfast while on a family vacation in Florida before they were at the firm. I remember how badly they wanted a seat on the desk. I also remember the look on my wife's face when I was sneaking out and her asking, "Where you going?" And me telling her I got to meet these 2 young men. And her saying, "Well, we're on vacation." So these 2 young men had a few ordinary jobs in the workforce that were, how should we say, not satisfying to them. I know there are some watching this video right now who are not at the job that they want and would love to make a change. These two traders disclosed that they were working as hard as they could on their trading as independent traders with inconsistent success. And they shared during our lunch, and I didn't know this at the time when we hired them, that they were both $60,000 in debt, most of it on a credit card. Let me say that again. They were both $60,000 in credit card debt. So during our breakfast, when we were meeting them, they implored me to give them an opportunity for a seat on our desk. Having interviewed and chatted with hundreds of traders over the year, I could see their potential ability. I could see their drive. They stood out from other candidates that I had met. Further, they demonstrated the diligent work that they had done. In fact, they dropped a large playbook with their favorite setups on this Florida breakfast table at Maggie Mae's. Remember, the playbook is a compilation of a trader's favorite setups broken down into clearly defined variables. And remember, the development of a playbook is a best practice we teach to our traders that helps them thrive. And here, these two developing traders had created their playbook, but yet were not part of our firm. They were impressive. They stood out. Man, I just love them. But we don't immediately hire transitioning professionals, those who have job experience after college and are looking to transition into a new job, without them earning a seat on our desk. No matter how impressive and how persuasive they were, there's a process at our firm to earn a seat on our desk. The seat is extremely valuable. It must be earned. They had to be trained properly by SMB. They had to stand out in their training with SMB. They had to show some skill and potential while trading live, even if they weren't consistently profitable yet. If they did these things, then they could be hired for the desk. And you know what? They did. Of course they did. They were. They did stand out. And here we were celebrating their success. I asked them at lunch how they were now doing financially, and they were proud to share that they had paid down all of their debt and each had $400,000 in the bank. They had gone in, their words, from $60,000 in credit card debt to now $400,000 in the bank. Think about that. Think about the importance of that. They had changed their financial status. They were so proud to state that they now had a few years of savings to live off of so they could just focus on improving their trading. I laughed and cracked. You've got a lot more than that. I reminded them that they were just getting started. I congratulated them. You should be very proud of your trading success. They had literally changed their lives. These same two young men with the same work ethic and talent and desire lifted from the environment of independent trader with that lack of proper trader education to properly trained like a professional firm trader made all the difference for them. They would have most likely been just another one of those failed traders you read too much about, despite all their hard work and effort. Now they were thriving with $400,000 in the bank and realistic goals to become even better. And I was certain they would achieve them and excited to watch them grow. Perhaps at the start of this video, you knew little about day trading or weren't exactly sure how to start the right way. In this video, you've learned the incredible benefits of day trading, the drawbacks of day trading, what is day trading for the complete beginners, the fundamentals of candlestick charts, day trading basics, what you need to be a successful day trader, the essential ingredients of a profitable day trading strategy, day trading strategies, risk management, stock selection, the attributes of a successful day trader, day trader tools and resources, and how to level up your day trading with SMB. After learning about all of this, we do hope you're armed with better information and knowledge to move forward. From all of us at SMB, train and trade well. If you don't actively trade US stocks, skip this video. It's not for you. If you do, we're betting you've tried every trading strategy, followed every advice available, and bought every course, but nothing seems to work consistently. We're betting that you always feel like you're so close to consistent profitability, but it's like there's an invisible wall that keeps you stuck and unable to break through no matter how hard you try. You're not alone. That's because a study of tens of millions of trades spanning 15 years done by a group of researchers at the University of California, Davis, has shown that a staggering 99% of active retail traders never reach long-term consistent profitability. That is far, far worse than the generally quoted number of 90%, which makes this next stat even more interesting. At our firm, SMB Capital, our new stock traders reach the status of sustaining consistently profitable trader at roughly 20 to 40 times the rate of independent retail traders. That is an absolutely staggering difference in success rate. But why is this the case? We've put together a detailed video dissecting why that is and how you can finally break through to the consistently profitable side. So click the link on your screen now to watch this eye-opening video. When you watch the video, you'll also be getting 3 cheat sheets with the exact entry, stop, exit, and other precise execution rules for 3 of our top performing stock trading strategies that have made our firms tens of millions of dollars collectively. This gift alone is worth far more than the few minutes of your time watching the video. And if you haven't heard of us, we're not some funding company calling itself a prop firm. We're one of the world's most elite and respected proprietary trading firms, and we've been growing steadily throughout all types of market conditions since 2005. We have over 50 professional traders on our floor, including multiple 7-figure and even 8-figure per year traders. In fact, our top traders have each made nearly 20 million in net trading profits in a single year, multiple times. So click the link on your screen to watch the potentially game-changing video we've put together for you and get the exact entry, stop, and exit rules of 3 of our top performing stock trading strategies, all for free.